Hello everyone, I hope you guys are doing well. It's me, Adnan Rahman, the market analyst for Errante. In this webinar, I'll explain you a couple of things, especially a very important, second, a very important trading pattern. Okay, yeah, I'm back. Okay, very important trading pattern known as the outside bar. This one known as the outside bar. It's just opposite to the inside bar. The difference is that in inside bar you have a bar. The left bar is inside the bar preceding it, something like this one. Okay, but when it comes to outside bar, when it comes to outside bar, your second bar is outside the first bar. I mean, look at the highs of this bar, the first bar. Okay, so the second bar is outside the high and low of the first bar. Okay, this is what you need to see. Now the main question is, why is this pattern important? There are two major reasons for this one, because this pattern solves the most important mystery of retracement. Okay, it's a very important pattern. If you're able to find it on an H4 chart or a daily chart, then you can easily target for retracement entries. Okay, so the first thing is this one, and the second one is that it gives you the option of grabbing, also known as liquidity grab or liquidity sweep or whatever you can say. LG, here in this webinar I will use the term liquidity grabbing. Okay, this is your grabbing. Now what is grabbing? Basically, grabbing basically, if the the wick of the second or the next candle passes the low of the previous candle, like this one. See, this wick over here, this much is low or has passed the low of the previous candle. This is this one. So what happens over here, that in this pattern, in the outside bar pattern, you can take your retracement entries. Okay, and you can move towards the upside in retracement, and you have this liquidity grabbing stuff over here as well. Obviously there are a few points you need to keep in your mind, and I will be explaining you those points as well. Okay, the first thing you need to keep in your mind is, let's understand it. I'll explain you in 6 slides and then I will take you to the chart. Okay, the first thing you need to keep in mind that both the candles shall be bullish. Okay, like see, both the candles shall be bullish or they can be bearish. Okay, the thing is, both the candles must be in the same direction. Either they must be bullish or either they must be bearish. Here in this example, I'll explain you the bullish ones. Okay, and on the charts I'll explain you the bearish ones also, as soon as they are formed, or any other that has already been formed. Okay, so keep this in mind. The first and foremost important thing is that both the candles must have the same color. You can, in a layman's language, you can say this, that both must have the same color, or either bullish or bearish. Okay, bullish or bearish. This is very important stuff, because if you have any mixture, if you have some sort of a mixture over here, like this is your a bullish and this one is okay, and this one is bearish, like bearish, okay, then you can see the market coming into arranging stuff. Okay, that is what we don't want. We want clear cut situations and clear cut patterns for ourselves. Okay, so the first thing is, both the candles must be either bullish or bearish, the same direction. Then okay, as we are done with the first one, see, the first one is bullish. Okay, both are bullish, and then you must have higher highs and lower lows formed. Okay, keep this in mind. These all are the must scenarios what I'm telling you right now. Okay, the second candle must be higher high, okay, as compared to the first one. Okay, and now if you look at the low of second candle, it must be lower low as compared to the first one. Okay, so what do we have? Like, let me show you again. We have high and higher high, we have low, and we have lower low. Okay, you can take the screenshot of this one, and I think that I might have the option to drop the files in this very place, and then you can take these files as well. Okay, so what we can do is, what we want now is high and higher high, okay, low and lower low. This is very important. Why it is important? Because now in the upcoming slides we'll come to understand it, and then you will understand the reason that if you don't have one of this, like if you have high or lower high in case, then all of the setup is negated. Okay, that is what we don't want. Okay, just let me repeat in a while. We want both the candles in the same colors, that is in the same direction, either bullish or bearish. And then in both the scenarios we want this one, higher highs and lower lows. Okay, in other, like, in the bearish momentum or bearish side, there can be another system. That is what I'll take you on the charts and explain you. Okay, what do we have over here? Higher high and lower low. This is important. And now let's go for the third important thing. The first one was two candles the same color. Second one is you need higher highs and lower lows. Okay, and now I'm going to explain you, okay, what is the meaning of this one. See, to understand this, you need to understand the manipulation theory. Okay, we need to understand the manipulation, because once we have found the footprints of the manipulation, that is liquidity grab, LG, or like sweep, whatever you name it, once we have found this one, then we can easily understand what the big players are doing and what they're expecting, or what they are, in what direction are they taking the market. Okay, so to understand this, we need to understand manipulation, and for manipulation, or to capture manipulation, you need to understand this basic. See, when we have a green candle, it means its open price was towards downside. Okay, this one, and this is not open, this is the close price basically. Okay, the open and close, this is the most important thing you need to see. Okay, the open is always lower, and the close price is always, towards the upside. And in this scenario, I have already shared the webinars for this one and images as well. When your close price is up and your open price is down, that means the candle is bullish. Okay, just learn it this way, like open, okay, and then close, bullish. Okay, and on the other hand, like if you can see this way, close price, and then open is equal to bearish. Keep this in mind. In this case, what happens over here? See, your open price is over here and your close price is up. That means it's bullish. And that is the reason why these trading softwares like MT4, MT5, and TradingView, CTrader, any software you name it, they have this color coding that even just by looking to the colors, you can understand that where is the open price and where is the close price. Okay, so it's a bullish one or bearish one. So the color coding tells you. Fine. And now we have to look at the low of the first candle, that is over here, and then the low of the second candle, that is over here. That is what we saw in the previous slide, right? We had this low and lower low. Okay, so now what we need to do is, when the second candle, when the wick of the second candle, this is the wick, okay, wick of the second candle, see, let me write it properly. Okay, when the wick of the second candle go past by the low of the first candle, and it creates this void or this place over here, now this is your manipulation phase. Okay, let me explain you this one. See, the second candle has gone past by this place. Okay, passed by this one. So this whole area is your manipulation zone. Why this is called a manipulation zone, I have explained this many times in the webinar. I'll explain now as well, that the smart money wants guys like me and you to say that, okay, man, now there is a breakout of this level. Okay, now keep on, like entering for a downward movement over here. What happens is that all the new traders, they keep on selling over here, and then the market suddenly rallies towards the upside, something like this, and then it keeps on moving towards the upside. And then you will say that, I don't know, man, the place where I just took the sell position, the market didn't move in that direction and it went toward the upside. Sometimes you will talk to yourself that market was waiting for me to enter and then it turned its price. Okay, so this is what we don't want. We don't want to get ourselves into this manipulation phase. We want to understand this manipulation phase. We don't want to get caught by this. Okay, so this is the place why we need to understand the manipulation. And now, by now you might have understood why I said that I need low and lower low. Now just imagine if there was no you just get rid of this one for a while. Okay, just give me 1 second. I'll just take this color from here and let's draw this. For example, just see if there was no this place over here. Okay, then what would happen? We would see no manipulation. Once there is no manipulation over here, okay, then we would not be able to grab the footprints of the smart money. Okay, so keep this in mind. Okay, now I repeat once again, what we want is two bullish or bearish candles. That is what we want to see. Okay, and then a higher high and a lower low. Obviously, see, if we have bearish candles over here, imagine if this was bearish candles, then we would target higher highs. Okay, and then we would like come towards downside. I'll explain you in the charts as well, don't worry. And then we want to find this manipulation. Okay, and now let me take you to the other charts and explain you how this will go further. Okay, now just let me explain you in one more image that how this will work on a smaller time frame. Like, say, this is your higher time frame and this is your smaller time frame. Okay, what happens in a higher time frame? This is your candle 1 and this is your candle 2. Okay, and this is your manipulation line over here. This area is all your manipulation. So what happens over here? Now this green is this place. See, what happened is that the market has gone towards the upside. Okay, from here it has moved towards the upside. Now this is this candle over here, the candle 1. Okay, now you come towards candle 2. What happened over here? See this big wick over here formed. Okay, this is what happened over here on a smaller time frame. We had this downward movement, okay, on a smaller time frame. And here is the place when you had this breakout over here on a smaller time frame. Traders might have thought this as a breakout, and they would say, okay, man, we have got a breakout and we have caught a new and a bigger trend. Okay, this is what happens. And then what happens is that in the same candle, the market again moves upside. Okay, it again moves upside. Let's take this blue color. It again moves upside like this. It goes up, and when it goes past by its own open price, then it converts its color into into green one. Okay, this is a very basic concept of forex. If you guys don't know how the color changes, you need to google it, or just let me know. I'll make a separate webinar for this one. So once goes past by its own open price, the red lines convert into green ones. Like, see over here, see, it was going up. As soon as it just came over here, it went above its open price, it has converted into a green one. And that is the place where we had this movement. Okay, this movement. Okay, I'm just explaining you the formation of this movement, how this happened. Okay, what you need to do now is, what you need to do as a trader now, sorry, it's my mobile. Okay, what you need to do now is that once these candles are closed over here and you are done, all of these two candles are done, they're closed. What you can do is you know that the market momentum is towards the upside because these are two bullish candles. Okay, and then you have caught this manipulation zone as well. That is a second confirmation that the market is willing to move towards the upside in terms of smart money concepts. Okay, when you have this, the best place to enter right now is not on these highs. Okay, the best place to enter is right now is that you can wait for the market to come down. Okay, you can wait for the market. See, this is the place. Let me take this line. Okay, see, this is the place, the highs, right? This is the highs. What is the best place to enter? That you can enter over here, this place. Okay, you can come down and grab the market from here and target towards the upside. This is the option one. The second option is you can enter a long position from here. Okay, you can just wait for the market to come down, and then from here you can go towards the upside. And usually this area will be somewhere between 50 and 60 percent of fib. Okay, this is something. Okay, and then the next option is you can just draw the Fibonacci of here and come into 76%, like 76%. That's what banks like the most. Or in this discount zone, like let me explain you the discount zone. You take a high from this level. Okay, you take a low from here. Okay, just grab the 50%. It's something over here. Okay, now this is your premium and this is your discount. Okay, so somewhere over here in this place, if you have an order block, okay, or let's suppose you are coming down and then you see like a fair value gap, something like that. Okay, something like that, a fair value gap, and like something like this. Okay, so this is a fair value gap. Okay, on a smaller time frame, then you can just come here, tap this fair value gap, and then you can move towards the upside. Any entry position that is more convenient to your side, that is what you can do. So the whole basic formula is that you have so many options to enter over here. The first one is this one, the second one is this one, okay, and the third one is somewhere over here in this in this discount zone. Okay, now the story doesn't end over here. Now let's see this same thing on our chart, what our chart is saying us. Okay, this is the gold on an M30 chart. Okay, gold on M30 chart, and now we will understand what do we have here. Okay, what I've done is I've just coded the strategy that I've shared with you into this indicator, and now let me explain it to you. Okay, like I click on this PO3, it's power of 3 basically. Okay, also you can name as the outside bar I've told you. So what happens over here, as I have select the PO3 on an H3 chart. Okay, you can see this, it's an H3 chart. Okay, so what it means on an H3, let's see. I need to move this, get this out of the way. Okay, something like this one. Okay, now let's see if I can zoom it in. Yeah, I can zoom it. I need you to understand. See, the same thing now as I've explained you the bullish candles. Now this is something I'll be explaining you about the bearish one. Okay, this is your first candle. Okay, first candle, and this is your second candle. Okay, now what do we need? Two colors. Okay, two candles, colors shall be same. Okay, in other words, two bullish or two bearish candles. What do we have over here? These are two bearish candles. So our first thing is okay. Now what do we need is there must be higher high and lower low. Okay, do we have higher high and lower lows? Now let's see. Okay, see, this is high, higher high, and this is low and lower low. Okay, so we have this second thing also done. And what was the third thing, if you guys can remember? Now let me explain you. The third thing was we need to see some sort of a manipulation. Okay, that is what we see over here. That this is the first candle, and this part over here, this is your manipulation that has happened. Okay, so what happened is in this 3-hour candle, what the market is trying to tell us that in this 3-hour candle, there was this movement towards the upside, and then people thought that we will easily find out this manipulation. Okay, so what I'm trying to explain you now is that these two things, and the third one was manipulation. Okay, I'm just writing man. All three are okay. Yes. Now let's come on the smaller time frame. Okay, because remember guys, if you will stay on the same time frame and try to catch that movement, trust me, it won't be easy one. I mean, I know people who are doing this, but I can't do the same thing. What I like to do, if I am on H3, I'd like to go down on M15. Okay, when I'm on M15, I'll find the same, that pattern. Just give me 1 second. Yeah, see this one? It's over here. I hope you can see this. Okay, now it's easier for me. I know it that this was my manipulation area. See, it's easy to watch now. Even though you're not looking into anything, but you can see this pin bar formed over here, and then the market moving towards the downside. Now, this is the main thing you can see. You have this manipulation zone, and now you can wait for the test of this manipulation, or simply just take your fib tool. In my indicator, I'll click F and C. 1 second. C and C and F. And now I'll be able to draw. It's going towards the end. Better off to take the one from the indicator. Actually, this is. Let me get rid of this extra things. Anyway, never mind. So what I'm trying to say is that you can just draw your fibs like from here till here, and somewhere over here you will get your like 50, 38 and all that kind of stuff, and you can enter in in this place over here somewhere anyhow. Okay, or somewhere in the gaps like this gap over here. Okay, that can explain you that okay, market might be going for a downside, and flag formations and whatever. M15 is a very prominent type of a time frame for your daily usage. If not that, you can even go for your 20 and 50 period moving average, and you can see the crossover. Okay, simple as that. And now let me take you to a few other examples as well. Okay, just let's see on gold further. Yeah, see this one over here. See this one. This is the gold on M15. That is what we are seeing. See this small manipulation area over here with this higher high manipulation over here and this lower low. And what happens? You can draw your fib from here till here, and this is like 30% or what you can say 30 or 35. And even though you can look at this previous support comes at current resistance, okay, this area over here, okay, and it can move the market towards the downside. Now any other examples? Let me show you at least 3 examples in the same chart. Let's get back. something over here. Yeah, now see, this is, we might have losers as well. Okay, it's not something that it's 100% sure. Like, see, this was something like, see, this was your manipulation side over here, this one. Okay, it got low, everything was okay. Okay, so we were expecting the market to move towards like something from here, and then it would have ranged over here and then come down. What happened? It went up. Okay, so this, it's not an absolute one. There are losers as well. All you need to know is manage your stuff, and how to manage it, that if you're breaking the highs, okay, and you have these tests over here, something like this, and that is the time you could like ask yourself that, Mr. Bus, I'm not going to take it further, because now we have series of new high and the market has tested this earlier resistance as a support now, so this is a no-go place further. Okay, so keep this in your mind as well. And now let's see, like, something, this was on h3. Let's see, do we have on something from the h2? Okay, now see, we had this. Now see, this one, this red one is across from our side, but soon after that we had this manipulation from the green side. Okay, and then the market rallied, and it rallied and rallied and rallied. See, okay, market gives us the options. Okay, it gives and takes, and that is market. It's called market. Okay, now let's see, as we are done with gold, let's see something from the dollar index. Because when I teach someone, I usually look for the gold and dollar index. Okay, and by the way, in the morning, social media was full, it was full of this main concept that the dollar index might fall, it might shatter. Okay, but the fundamentals were totally against it, and that is what I've explained in the morning in the social media posts. There were clear signals from the data of the US, and I've explained it very well, and the market is going in the same direction. And then from a technical side of view, there were few examples. Like, let me explain regarding the same strategy we are like seeing now, and this is what I've seen in the morning. Like, see over here, this one, see, so many numerous strategies on h4. See the same thing over here. Now I'm on h4 and I'm explaining you on h4 as well. Okay, see, this is the first candle, this is a manipulation, the market went down, you could draw your fibs from here, and this is something like 30 or 50 or 60 level. Once you have touch over here, anywhere a bearish candle, a stronger one, you could have moved towards the downside. Okay, now it comes to this one, this first candle and second candle, a small manipulation over here, and then the market went up, it came for the test and rally towards the upside. Same thing in this over here as well. That's why watch this on the same time frame is very hard. For that purpose, you can like go down to the smaller time frame. That is what I usually do, and I can like track more easily. See, this is more easier now. Okay, this is more easier. Like, this is the manipulation, this is the manipulation, okay, of the green side, and then it went up and it's still in the upper side. Obviously, if it would have come downwards, I would have marked this position as a loser, but it has gone towards the upside. I mean, the trend was so stronger that it didn't bother to come down. Okay, it was so stronger. Same thing over here. This is your manipulation area over here. The candle went up, a small retracement, and then it's going up since the morning. Okay, with this gap over here that I've told you. So in short, what I'm trying to say is that there are numerous examples and numerous trading strategies and signals regarding this particular strategy that I've explained you. And as it's a day trading strategy, you can use it in any time frame. Now let's see in some of the minor, like we have gone to the gold and dollar index. Let's look into towards the minor, and this is a very keen pair. That is what I was wanting you to guys to understand, especially for the dollar, Australian dollar. Okay, let's get rid of this one over here, and something over here. See this, the same story repeats again. The pen, okay, small manipulation over here, the rally towards the upside. A small manipulation over here, the rally towards the upside. I won't go into the extreme details now because you have grabbed the concept. Okay, now let's look into any other one. Like what pair is this? Like EuroCAD. Let's see the EuroCAD, and now let's look into any other time frame. Like this is H4. Like let's go on H3. Okay, let's go on H3, and as it's H4, let's drop down to M13 or something like that. Let's get rid of all of these drawings. Okay, now see this one. We have one over here. See, this is your manipulation. Okay, I won't go into that again and again. We have low, we have lower low. This is manipulation. The market rally towards the upside. It came down. This might be like 61% or something, and then we had this movement towards the upside. Okay, one thing you need to keep in mind that the fundamentals must also align with your setup. Okay, please keep this in your mind, because right now, you know, I'm a fundamental trader, and in the afternoon I saw a very important news that was out, especially on the weekend, regarding the euro and the US trade deal. And everyone were like so happy that, there was a 30% of threat to the euro, of 30% of this all tax scenario, tariff scenario, and it was reduced to 15%. And everyone was wondering that, man, wow, like euro shall rally and all that stuff. But the bigger picture behind that was that it's not 30 to 15. Okay, it's what they were paying earlier. They were paying 2% earlier, and now it has skyrocketed to 15%. So who is responsible of this inflation from 2 to 15? Okay, inflation at the day end, it's not good for the economy, right? That's all we know about it. So this was something concerning, and this is something concerning for all the fundamental traders, and that was the reason why the euro fall. And all of this, the inflow of cash or money or savings or whatever you can say, was going towards, or will go towards, the US. Okay, so that was one of the reasons why euro has fallen. Okay, and it's not something like that, it has gone for no reason. There are particular reasons for that. Okay, and fundamental analysis is the main key, and then technicals only let you align your entries. So keep this in mind. Okay, guys, this is for now. If you have any questions, please do let me know, and I'll be more than happy to assist you. Okay, thank you. Have a good day.